Hi, and welcome back to yet another exciting episode in Robinhood's Code of Traders. In a series of the new trader, today we will discuss mainly on VWAP plus standard deviation bands, and definition. We'll touch base the formula and calculations, its rules and implications, which are very vital. Yes, the drawback of VWAP, importance of standard deviation, and importance of forced standard deviation and few strategies which can yield you minimum 2 to 3,000 rupees on daily basis and given day you can make minimum 10 to 15,000 from these strategies. So let's get started. I'm sure we'll enjoy together. So what is VWAP? VWAP is nothing, is volume weighted average price. So why it is so important? Well, when we touch base the formula, we understand every indicator has either is based on price or either on volume. So we want a mixture of indicator which has both. So this VWAP is nothing. It takes the price into consideration plus the volume into consideration. So that gives an edge. And this only works for intraday. It works in only for intraday. So as this is a series of the new trader, we will apply the power of standard deviation and see how can one pull out money in any sort of market, be it range bound, choppy, or any kind of market. So let's see. So very simple. We need to find a correlation between the price and volume. So example, in trade number one, we had 100 volume and the price was vicinity of 100. So as it pumped volume, the price rose up. So over here, you can see the price and the volume are increasing. So what will be this price be? The calculations are very simple. What is doing? It is doing nothing. It is simply multiplying a volume into price and it will take all the summations and it will divide this by volume. So you get a relation of price and of volume. So that is something very, very new and it is very good indicator. It works. The formula is very, very simple. It takes the summation of all the price or the summation of all the money. That means the price into volume divided by the summation of volume. So it negates everything and the the figure which you get is absolutely in proximity to the price. Formula is very simple. I'm sure we'll nothing wrong in the formula or nothing it's very simple compared to other data in the formula. There are a few rules. So VWAP is a cumulative while most technical indicators are periodic. So if you say if you take any indicator of many in any settings, example, imagine if you could see only the last 9, 20 or 30 of rest of any candle or indicator. So this is not continuous. So this will give you the specific time period, the price movement, but VWAP does very smooth. So VWAP is a cumulative while other indicators are periodic. Sounds very different, but when we touch base the next point, we understand what this actually postulate means. VWAP is a susceptibility to change in length and time. So every indicator, if you change the length, for example, you're working in 5 minute time frame, we are working in 8 minute or working in 10 minutes time frame. The chart will change based on the time frame. But VWAP is, so example, if you dear look, suppose a VWAP is sitting at maybe, let's example, under our previous example, our VWAP was 109. So if you look, any chart made in 1 hour, maybe in 2 hours and 1 minute, so VWAP will be stagnant. So this is very important. So it is not susceptible to change in the length or time. So that means it is stagnant. So that gives an edge. VWAP acts as magnets capable of either attracting or repelling. One of the most common myth about VWAP is price always attracts it. It's wrong. This is the biggest myth of this indicator. This is false, as such interpretation leads to an oversimplified approach or short anytime above VWAP. So the rule says we know that the price will come to its minimum potential. So many a times when there's a price retracement, it comes and touches the VWAP, but that is not a rule. So it is saying one of the most common myth about VWAP is the price always attracted to it. Attracted to it. So this is not a mean. So many a times, suppose this is a VWAP And if the price is moving up, this is the time we can find a trade. And for aid of another indicator, the price is retracing, we can assume that price may come to its mean. What does it mean? That means this is the time where the price has the lowest potential, and from there it can make and break out. So this can be used. Okay. Vwap has a tendency to continue on its current path. By adjusting for volume, it is calculated Vwap is inherently most responsive. It's most responsive to price movement with significant volume versus that occurs in less. And as Vwap incorporates more and more transaction date and time, date over time, its cumulative nature also makes it more resistance to random oscillation. So Vwap will play a vital role in our intraday segment. Vwap is an event-driven average. You're right. In event days, this can oscillate, it can swing. So it can't be the swing of the price of the instrument will be high on event days. What event is, Robin? A macroeconomic report, earnings release, overnight gaps, high volume occurrence, and notable high volumes and low. So since the Primera Vwap is nothing but it is a price into volume, so it has a direct and huge correlation with the volume. So if there's a volume turbulence, the price also may get turbulent. So it is absolutely directly correlated. Vwap is absolutely correlated to your volumes. That is something which we also want. So you want, if you go to Dow theory, it just says price and volume are highly correlated. So this is one of the few indicators which gives an impression, which gives the overview that volume price is absolutely correlated to your volume. Okay. Now, what is this Robin standard deviation? So what we want, suppose we have calculated Vwap, we learn the formula, and suppose this for argument's sake is your Vwap. Now, by using the power of standard deviation, if you can plot a standard deviation 1, both up and down side, then this can act as a lovely band, and this can act as a support resistance. Now, on a high turbulent band, if you plot another day standard deviation of standard deviation 2, then this will be acting some sort of band. So we can work and can find the bands. Robin, what is the use? Friends, it is very useful for your future where the lot size is very high. So you can know your stop loss and you can enter or exit your trade account. Now, when you're talking of standard deviation, what is standard deviation? So let us understand what is standard deviation 1 and why we are using it, how it works. So this is something you'll find only in your trading view. These indicators are free of cost. So Vwap plus standard deviation, it's improvisation of Vwap. It is not only giving the volume weighted average price, it is also giving the standard deviation one. That means how much it can oscillate, the probability of your oscillation. So let us see. Sounds good. Let's see how does it practically look like. By the way, what is the standard deviation? It is a fundamental concept of statistics that measures the dispersion of data. That means if this is the price and the price it is dispersed, so it will give you the degree of dispersion, or it will give you the momentum or the swing of at least the dispersion is happening. So how is calculated? Very simple. It is very calculated. It takes the standard deviation takes is nothing. If we want an envelope. If suppose this is an envelope, we want an envelope, so it should cater to almost 98% of the swing. So what we are doing technically, we are simply taking a Vwap and we are calculating the standard deviation. The object is very simple, as we did in Bollinger Band. But Bollinger Band was purely based on price. But this instrument, Vwap, is based on volume also. So formula is very simple. No need to go over the formula, just I'm giving overview. N is the number of period, how many periods we want to take. And this is a period which is where the population is very high. If there are same formula is also used, same formula when the population is not so high or the density of the data is not so high, we'll take simple n. So that doesn't mean let's not get deep into the formulas. So this is the number of periods, and x is the intervals. X is the price number of price 1, price 2 till how much price you're taking, and this is nothing but the mean. So typically on layman's perspective, it is saying the price will oscillate in this. You will take the mean and it will do a standard deviation. It will do a square root, and this will be what we call a standard deviation. And what we are saying, the amount which you're getting, standard deviation, we simply multiply that by 1, we multiply it by 2, and multiply it by 3. So we get a basket or we get a rainbow here. So we'll give a scientifically good approach for a stop loss or a approach. So this is a very good tool, not only for your target, it also a very good tool for a price reversal. It is very good tool for your setting your target. It is very good tool to increase the number of lot size for a short-term target. You heard it right. You can play this tool after quite a long time of practice. You can go for 50, 60 lots and you can make a quick money with assured return. Hey, there's nothing word for assured in share market. So you can, the probability of doing this will increase. Okay. Is this market trending or choppy? This is also used to, many traders view all the charts as long and short, but we believe that a perspective is misguided. During the periods are choppy, there is no. So this indicator also has a limitation. So if the market is choppy, the price will oscillate about the Vwap. So it will give you many false signals. So that you have to understand. So again, as it goes, you have to trade this indicator with other indicators. So to find the choppiness of the market. The market is choppy, so it will give you the almost some sort of false signal, or result will not be optimal. Right. Where I will enter an entry. So as we told you, this indicators is very good tool for your entry. You can find entry points and you can find the exit point, or you can also have a look for stop. So once the indicator is giving the signal for entry point, that means it will also give a signal for exit point. So you can calculate before entering the trade how much my loss can be, or how much what will be the potential loss and what would be the potential gain. So this is one of the few indicators which, number one, has a volume. Number two, it is giving the range. And number three, it also is giving a hidden signal with entry and exit. So what else you want? What a daily indicator we have plus, but split it. So you simply put a standard deviation. So that will give you these three things. Okay. If my trade is successful, how I manage? So simply, if the price is making a higher high, so it is quite obviously we can draw a trend line. So Vwap will come to a mean and move. So it's as simple as that. If you're making, if the band, if this is the, if this is some sort of band, the price is moving above the band, for argument's sake. So you simply trail the stop loss and enjoy the entire market. So this also is an indicator which will give you that the total tops and the peaks. So actually what we want in intraday, we want an instrument which can give you the maximum top and the maximum bottom. So this is one of the indicators. With 8 of other indicators, obviously, you can say that I can catch the entire top, maybe 90% of the top, and I can enter at the bottom. So this is one of the best indicators for intraday. Robin, why you use the word intraday every time? Because generally in Indian market, it starts at 9:15. So by the time the data is, so we should not be using this indicator before 9:25. Why? I mean, why you're saying this? So yes, it's not written in any book, but from 9:15 to 9:25, this is the time. So why will not? Because the volumes are abrupt. Suppose there's a gap up or gap down. So people will move out, move in. There will be shortcoming, or simply you will be accommodating losses. So till 9:25, till 9:30 precisely, or so by the time the volume has some sort of stability. Because every time I'm saying Vwap is nothing but a function of price and volume. So if price is stagnant and the volume is oscillating, that means this is the time you should be avoiding this indicator. So ideally for any instrument, this you should be avoiding for Indian market, equity market, and we should use an indicator maybe after 9:25. For aggressive trader, you can still use a 9:20 etc. So why? The logic is very simple. Gap up, gap down, some news, some short covering, BTST, SBST. So people will take their profit and losses within this stipulated time. This is the time your volume will fluctuate. And the volume will fluctuate, so that will result huge fluctuation in price. So this is the time you should be avoiding. By the time 9:25 is seen theoretically, practically from 9:25 to 9:30, the price gets stable. After that, you can enjoy the entire rally on each other. Okay. Okay. How does it look, Robin? So this is nothing. First thing I'm telling you, you will get this only in TradingView only. So this is a Bank Nifty's 2nd January's chart. So black line is nothing, is the Vwap. And what are this, Robin? These are nothing but standard deviation 1, standard deviation 2, standard deviation 3. So what is this band? Then it's nothing. It is taking the Vwap, and let's assume we'll take red as a standard deviation 1. So based on standard deviation 1, just calculate a standard deviation into 1. So let's get examples. Example, it is example 100 is a Vwap, and the standard deviation has come to vicinity of say 1. So next will be 101, right? And next will be 102, and so forth. So simply you're making an envelope, and if you see it, this trading view has a 5 band. So it's up to you how much band you can keep. On a trending day, you can make humongous profit. If you see, Robin, this has touched your 1, 2, 3, 4 band. So you can plan accordingly. And on over here, the price move to the mean. So you can use this information. This can give you a huge money. As I was telling you, you can increase the number of lot size and make money. So this is an area where you can make money, and this is an area you can be in the rally or not. So this will give you n number of opportunities. This is one of the best indicator for scalping, and it works. And because and the price, have faith in me, guys. I'm doing this indicator for last 1 year. It will respect these levels. It will respect, and this, as a book says, this can act as a magnet, or this can act as a repelling magnet. So over here today we found it act as a repelling magnet both the time 1, 2, 3 times the price came in, it pushed it down. So if you have this small information, small this knowledge, what a tight stop loss and what a minimum gain you can have. So though it looks very simple, it looks very less. But what you want, if you increase the number of lots, example, say 30, 40, you can easily pull out the money. I'm not going into any figure. By the way, it works in stocks pretty well also. So let's see a few more charts. Same chart. This is Bank Nifty, same with Nifty. So Bank Nifty somehow moved up. So it moved to standard deviation 1, it bounced back. So if I play accordingly, so what the rule says, if the price is moved up, then yes, this will also give some sort of loss. So this will obviously, if you're looking for a positive trade, so this will be your loss because price has moved well beyond the pivot and it has got a good closing. So this will be a very small loss. Yes, you're right. But on the next time frame, this would have given a good fall. So one would have made a good money. So now it depends upon experience. So how we can. So this today's market, we could have people pull up huge money in bank. My apologies. The chart which I'm referring is 3rd of Jan, not 2nd of Jan. My issues are okay. Tata Motors. Tata Motors, what a lovely go. You see, a typical Maruguzu, in the no wick in the bottom, and it moved out. As the price of building also was a volume, so you don't have to put much chart. You can easily find out 1, 2, 3. So it hit the standard deviation 3 and it came down. So what a lovely move, not size of 500 all. People have made a humongous profit. So this is a simple use of this volume weighted average price plus the power of standard deviation. Aisha Motor, CW. So we can easily, one would have easily caught the bottoms with other indicator and see what a move this out. Right? So it works pretty well in your indexes, stocks, and we are looking for a stock or index which has given some sort of good trend. So we'll expect these stocks to must have gone through an ADX or more than 25. So one indicator is nothing. You can't trade in isolation. You have to take other indicators also. So what we're looking for any ADX for stocks from more than 25 plus, and VWAP either side. So that is the area we can find out the tops and the bottoms. This is your second chart, 2nd of January chart. So if you see what a lovely, so this is the typical example of dispersion. So you will find out be in the rally. There's no point getting out of the rally. So you find out the price is overheated and moving in the upper band. So this is a typical example of the chart of 2nd January where people have made a huge profit because of the swing this is given. So this instrument, the data read in the phase, and this is simply buy on tips kind of. So we will use this indicator with other indicators also. So what example I'm saying, so we wanted to use this Vwap plus EMA. So what I've taken EMA, I've taken smaller EMA. What are smaller EMA? We have taken EMA in the length of 3, 5, all the Fibonacci series, and 3, 5, and 8. So if you see, there's a dispersion as the price is moving away from this moving away from the VWAP, if you see what a lovely dispersion as a result, you see the result and how the price has moved and people have made a good amount of profit. So we can use this information, VWAP and the dispersion with EMA also. And if you could put angle, and if your angle is somewhere in the vicinity of 45 to 60, then the range is very high. Have faith in me, guys. This also you can see free of cost in your trading. So we are looking for any sort of angle somewhere between 30 to 60. If you're getting angle between 30 to 60, that means the move is not sporadic. The move is consistent. And this is a very small information you will find in none of no videos or no indicator. So we are looking, which I've learned in our class 8, 9, 10, or projectile angle. So this is a good angle. You can make this sort of trend comes very less, or maybe give it 5, 6 times in a month. So be in the rally and you can make most of the profit. If you are able to catch this sort of rally in your given day, so you can take out at least half months time. Okay, guys. So same thing. We can use this with your MACD. So we can use this MACD also. So this it works with VWAP, it works with RSI, it works with MACD also. What else you want? One indicator working without RSI. Only drawback of this indicator, it works only for intraday. His bigger brother named Anchor Vwap is there. So we'll also discuss in our coming videos how we can use. So next video we'll try to find out how can you use the Vwap, Anchor Vwap to find a potential entry and potential. Guys, I'm sure you must have enjoyed the video. If you have enjoyed the video, do subscribe to my channel. I will really thank you for an overwhelming response in my Bollinger Band 360-degree view. If you have any query, any question, do write to me. It will be a privilege to help. And once you ask question, it helps me also, because there are many questions which I am not also aware. So once you ask a question, I have to ask and go to the basics, right, and see how it is done. Thank you.